Welcome to Tradier's The Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. How are you, Bobby?
Good. How you doing, bud?
Good. We are coming to you live. Today we had the CPI data. The number was 2.5, as expected, considerably better than 2.9 from last month. But the month over month, ex food and energy was up 0.3, which seemed to scare the market right out of the gate. Boom. S&P craters. Down goes Ali. No, down goes Fraser. Sorry about that. Then all of a sudden we're like, okay, maybe it's not so bad. We start to go again. Then we go down 80 ticks in the S&P only to finish up 30 or 40. Is the ridiculous two-way volatility today just a sign that the number was ambiguous? We don't really have an answer of 50 or 25, probably 25. Maybe you should do 50. What's your interpretation?
This is normally the kind of number I would never trade on because it just didn't miss by enough. And I don't usually trade on numbers anyway. I just leave the existing trades in place or I look for new pattern setups. But it's interesting the way you described it and the way that it happened. We saw the same thing in the VIX, where we actually saw a spike to a 3-day high in the VIX and then a close on a 3-day low on the VIX. And it was one of those things where I looked at that number and I said, what could possibly change the Fed's current view? If you ask me, this particular CPI number pushed them to 25 instead of 50. It certainly pushed the CME Fed watch tool to about 84.6% probability of a 25 basis point rate cut, which is the highest we've seen in about a month.
So I was just about to ask you a question, but I know it's a better question for our guest, who's one of our favorite guests. And believe me, all the people we interview are not fellow Italians. We have plenty of Merigones as friends too. By the way, this just happens to be another one. By the way, I say this all the time too, and this is another example of it. You may think Bobby and I's opinions are full of shit and that we're not the sharpest tools in shed. Perfectly fine. You cannot deny that we get great guests because we do. And we have another one today, Jim Bianco, president of Bianco Research, friend of the show, all-around smart guy. Okay, I want to talk about nonsense first, but I have a burning question about markets and the Fed that I know I'll forget if I don't ask it right away. So here's a theory that I have that I think I'm absolutely alone, and I want you to tell me if it's even the slightest bit reasonable. Okay, we're talking on the 11th. The meeting is the 18th. Let's say in 5 days from now, on the 16th, the Fed funds futures market are pricing in 90% chance of 25 basis point. 10% of 50 basis points. Let's say the Fed, Jerome Powell, in his head, really wanted to go 50, almost thinks he should go 50. Is there a chance that they look at the same futures markets and we do and go, shit, we didn't lead the market to the right conclusion, so we are constrained and must go 25 so as to not disrupt markets? Even this much validity in that, you think, or no?
Yeah, you're better off eating pets. Wait a minute, that's the wrong topic, right?
I've eaten goat. Is it goats? But it might have been a dog. I was in Jamaica. I may have eaten dog. But anyway.
But to answer your question, I think the Fed and the markets play a dance with each other. You know, the markets kind of price something in, and then the Fed validates it or pushes back against it. The Fed suggests something, the market validates it, pushes back, and they kind of come to a consensus. Whenever there's been something priced in to this degree in the last 23 years, or no, actually 20 years, excuse me, back to 1994, the Fed has not defied market expectations unless we're in the middle of a financial crisis, like the day after Lehman failed or the day after Silicon Valley Bank failed. So even if the Fed wanted to go 50, and the market is constraining them into 25, they're still going to go 25 because they didn't communicate it. Let me restate what I just said. The Fed believes in this concept of forward guidance. Forward guidance is a fancy word for tell them what you're going to do before you do it. If they start doing stuff that they didn't tell us what they were going to do before they do it, there's no more forward guidance. And then what happens is they introduce a lot of volatility into the market. What are they going to do the next meeting? Are they going to go into a meeting? You know, and no one will have any clue as to where they're going to go. And then we'll be subject to rumor and innuendo and all this other stuff that's going to gyrate markets all over the place.
So I like that.
I'm trying to encourage people. on X and elsewhere to ask questions
You
before
saw
you
the two
come on.
Stephen Goldstraw comments. A
Yeah, I
cat.
know. Steve is
Believe
just,
all cats.
Steve is just like happily trolling us right now, but it's a positive troll. Tim McLean asked, he said, here's one for Jim Bianco. If 70% plus of market pundits are in the soft landing camp, why are Fed funds futures for September 2025 pricing in 10 25 basis point rate cuts, implying a Fed funds rate of 289?
That is a very good question. And you really put your finger on the question. In the last 10 minutes before we started this stream, I tweeted out two charts. I tweeted out a chart of credit spreads, high yield spreads, and I tweeted out a chart of the S&P with its drawdown. And I said, credit spreads are very tight. They're not worried about anything. The S&P is closing 2.3% from its all-time high. It doesn't seem to be worried about anything. But then you look at the Fed fund futures, you look at a 365 or so 10-year note, and you could conclude those markets are panicking that everything's falling apart. So there's an inconsistency in the pricing in the marketplace right now. And that is really kind of at the heart of what we're trying to figure out. You know, I hear it all. Look, I'm an old lander. I've been trying to talk up the economy. I get trolled on Twitter all the time. And the troll is always the same thing, right? That 360 10-year note, you're wrong. Everything's falling apart. The economy's crashing. Somebody should tell the stock market.
My anonymous account. Sorry about that. Continue.
Yeah. Well, I was going to say, somebody should tell the stock market. Somebody should tell the credit market. Somebody should tell the economic data, because of most of the economic data is actually okay. If you're producing 150,000 jobs a month, you are not crashing with the economy. Then you look at the bond market, and it stands out singularly, unlike all of the other markets. Now, people like to say, well, the bond market's the smart market and stuff. I understand that. That's a legacy of 2008, because the bond market started zooming down in yields, but credit spreads were widening. You had a lot of stress. You had a lot of indicators across many markets that there was a problem. It was just that stocks kept making new highs. This time around, you've got a lot of indicators across many markets that there isn't a problem, and the bond market's acting like there is. So there's really no clean answer for this 10 rate cuts, you know, and getting the funds rate back to 3%. I mean, you know, some people are trying to argue that that maybe what it is that the inflation rate is going back to a pre-COVID. We're going to go back under 2%. We're never going to be back above it. We could now start to price in interest rates like we used to price them in before COVID. There's that argument. We're at 3.2 on core. We're at 2.5 on headline CPI, which are the lowest numbers that we've seen since COVID. But in the 7 years before COVID, they would have been the highest numbers that we saw in those. So we're not there. We're not there. Oh, but the market is assuming we're going to get there. Yeah, the same market that thought inflation was transitory. The same market that thought that 9% inflation was going to continue for a while. So the market doesn't have a good track record in predicting this stuff anyway.
So I got a question, first of all, about manufacturing PMI, because manufacturing PMI, somebody asked me today why I focus on that. And I basically say, because it works. If you line up manufacturing PMI to the stock market, it basically looks almost exactly like the stock market, with about a 4-month lag for the stock market, approximately.
You mean manufacturing leads the stock market?
Yes, correct.
Okay.
And we have 21 of 23 months of manufacturing PMI in contraction territory, but it's rounding up, right? It's going from like 45 to 46 to 47. Do you see anything in that tells you we should have 225 basis points of rate cuts? I mean, I think you already answered that question.
No, not at all. If you look at the manufacturing PMI numbers, you're right. First of all, just so everybody knows, it is not a measure of manufacturing. How many widgets did you make this month?
Right.
It's a survey of the purchasing manager. And they ask them a series of 5 questions.
Right. It's optimism, pessimism, right?
Right. They ask you, over the last 3 months, have you hired more, the same, or is your employment more, the same, or less? So your prices, your input prices, your prices you're paying, more, the same, or less. And then it's a diffusion index, 50 being neutral. the statisticians over at the ISM say that a 47 ISM correlates to roughly what we would call potential GDP around 2.5%. And so, no, that number is consistent with there is no recession. There is no slowdown in the economy per se. There is no real concern at the top level that we should be looking for some kind of a soft landing or we should be looking for 10 rate cuts. And so that is the conundrum. Now, I've got some theories on why potentially we're seeing interest rates lower. But, did I expect that we were going to see them go down? No, I'm the guy that's a no-lander thought we were going to go to 5%. I still somehow think that before this cycle is over, we're still going to see 5% or 5.5% on the 10-year note. It's just probably not going to be this year. But I don't think that the high yield is in for the whole cycle.
So I agree with a lot of what you said. There's one thing I'd like to push back on and see if you can explain my concerns about it too. You talked about credit spreads being narrow. And I look at them all the time. And I, in some ways, think, okay, the Fed increased their balance sheet by let's call it $5 trillion in response to COVID. So
just call it infinity. Call it
infinity money. Like, who even knows what 5 trillion even is? But let's say
right.
5 megatons, right? And then they pull back 3 megatons. So my point is that there still exists above trend $2 trillion of liquidity that's been injected into the system. M2 money supply over the last 19 months has been going up, not down. Is it possible that there's still excess liquidity in the system that winds itself into weird places, like narrowing credit spreads, like bananas taped to a wall trading for $150,000, like stock markets being near all-time high, despite the fact that some of the economic data is trending lower? What do you put on that?
Oh, no, I think that there's a lot to that. I think that a lot of that liquidity that has been shoved into the system is showing up in different places. And I'll go you one step further. I talked about theories about why you're seeing interest rates down. There's two markets that if you overlay them on the 10-year yield, they look very similar, and that's crude oil and the yen. And what you've seen happen with crude oil is you've seen a ton of shorting. If you look at the commitment to traders report, they're net short now, crude oil. I'm talking about if you add Brent and you add WTI, crude oil, large speculators together, they're holding a net short position, which they haven't done for many years. There's been a tremendous amount of shorting in that market, depressing the price because of that big amount of selling. Yields go down. Yields move up and down with the yen, which is the yen carry trade. And what we're seeing with the yen carry trade is that trade has been under pressure. Now, the yen carry trade is you borrow in Japan at near zero, and you go buy some high-yielding asset. The high-yielding asset you buy usually is not NVIDIA, and it's not Microsoft. It's not really the 10-year in the U.S., but the big one that they love is Mexican T-bills, because Mexican T-bills are yielding 10%. So borrow in Japan at zero and buy a Mexican 3-month T-bill, roll it every 3 months, and get a 10% yield. Wow. The peso's under pressure, Mexican market's under pressure, the yen's under pressure. And so you're starting to see that starting to impact the market, that the flight to quality market, treasuries have probably gotten a bid from that too. In other words, what I'm arguing here is that what you're seeing in treasuries might not have very little to do with the U.S. economy. It might have to do with the crude oil short. What might be driving the crude oil short? Look at what's happening to the Chinese economy. It is in a world of hurt right now. It is in big time trouble. Their stock market is down a lot. Their interest rates are at an all-time low. Their economic data is some of the worst numbers we've seen other than the COVID shutdown in the last 40 years. And so they demand more crude oil per day than the United States. They're 3 times larger. If their demand is off, and their people aren't driving as much because they don't go to work, they can't go to the store and spend money because they don't have it, that is going to depress the price of crude oil and depress gasoline prices. So why are 10-year yields down when all these other indicators, credit spreads, the stock market, everything else, is an indication of what the U.S. economy is doing? Maybe what's driving the 10-year yield isn't about the U.S. economy. It's about what's happening in China, being expressed through crude oil prices falling, and it's about what's happening with Bank of Japan policy and the big yen carry trade somewhat getting unwound.
Okay, that's amazing to me. Okay, because I never once considered the Mexican bonds, but anyway, and I'm still probably not going to personally. But
they're called bonos, and I'd like to see you mispronounce that word.
I actually, because they're called bonos, and yes, I may start trading them just so I can.
Do you have a bonus? Is the question.
I love bonos.
Yeah.
Okay.
See, we're all fifth grade boys at heart, right?
And I don't intend to be any different than that. I like being a fifth grade boy. Is that about 13? Because that's what I like to say.
Yes, that's about, yeah.
Okay. In Larry McDonald's book, How to Listen When Markets Talk, one of the things he talked about, was credit spreads and how that was watching those primarily when they started to bump out was kind of the oh shit moment several different times for the stock market. Do you think that signal to what's the number one thing you look at to ascertain whether or not it's the oh shit moment and that you were wrong about the economy and that things are starting to collapse?
Oh yeah, it's definitely credit spreads. I think that is probably set front and center. That when people tell me that the economy, the same Twitter troll, right? Oh, the economy's falling apart. I said, per what data? And they always throw out, something about the labor market data. We can talk about that in a second. But I always come back to them and go, stock market and credit markets disagree with you. The minute that the stock market and credit markets seem to start to agree with that idea, and I would go credit markets first, because credit markets, stock market is somewhat of a religion, and it's like gold, or it's like crypto. When it goes down, people get pissed and then they'll throw their life savings at it just to make a point. Credit guys don't give a shit. They just, if the market's going down, I'm out of here, and there's no convincing me that I should stay here for the long run. It looks like crap. I'm leaving. So when the credit market goes and spreads start to widen, that's my oh shit moment. Something's not right here.
Okay.
But they're not doing that. They're not. I tweeted the chart out a half hour ago.
People who are watching the show, what's the best chart to keep up, live chart to keep up that'll show you, tick for tick in credit markets? How do you get it in real time?
Well, I get it in real time. I look at the indicators themselves, but in the show, I would say HYG, the ETF HYG would be a good one. And the second one would be Bond Blocks, is an ETF provider that has a bunch of, they have a bunch of sector high yield ETFs. They start with XHY and then F for financials and, I for industrials and stuff. And these are industrial high yield bonds or financial high yield bonds. And you could look at those and you could look at a price chart of those. Those are price charts, not yield charts. So if you see the price chart starting to dive down, breaking big support, and, on their way down the multi-month lows, then that would tell you, something's not right here. Because like I said, those markets, those traders will just leave the second that they think there's a problem.
I'm going to take up a few minutes here, Jimmy, because I got a handful of questions. First one, I think I know the answer to this. I think it was Rob Gronkowski buying stocks at Cantor Fitzgerald. But Casey's Hot Chocolate asked what happened with the big magic Insta reversal today. Then he said, did someone leak the FOMC rate cut? But I'm pretty sure we all know about the FOMC rate cut. Do either one of you have any view on what that snap reversal was? And I bring up the Gronk thing because they interviewed him on Bloomberg, and he was saying that he's in Cantor Fitzgerald's office because he heard the market's down and he just wants to put on a couple of big stock trades and try and bring it back up. God,
well, now, in fairness to that, of course, Cantor Fitzgerald, today's 9/11, and we remember the history of Cantor Fitzgerald. So all of their business today goes to charity, and they bring in celebrities like Gronkowski to basically pitch to their customers to do trades with them, because then they donate the commissions to charity. So that's really why he was there. He didn't just show up because all of a sudden Gronk is an expert stock analyst.
Well, he said he wanted to put on the biggest trade for the day and drive stocks back up, and they did go up. Just like Elvis did encourage premarital sex. Okay, so we got a question from Widge on here. I don't know if it's a question or a comment from Widge.
Is Gronkowski managing Brady's money now? Then
I think so.
Is that what you're trying to tell me?
He'd be better than whoever put it all in FTX. Yeah,
I bet you Brady wants him to manage Giselle's money. Suppose the other way around. Right. So Widge says, adding millions of new inorganic bodies combined with, I guess he means migrants, combined with 2 trillion of annual deficit spending. So hard to print a recession like that. You really have to screw it up. Any comments on that?
I think that this is dead on correct. And this is one of the reasons why I'm in that no landing camp. Just so everybody knows, Wall Street loves airplanes. So hard landing is recession, soft landing somewhere in the middle. No landing just means we just keep going at 30,000 feet. We don't slow down. We just keep going. The two things that seem to be driving I think the big thing that's driving a lot of the data today is the migration story. Depending on what metric you use, the population of the United States has increased 7 to 15 million in the last 4 years. The state of Arizona. We've added another Arizona to the mix. Overwhelmingly, like 80% of that increase has been net migration. The other 20% has been more births than deaths in the United States. And that is permeating all of the statistics. Why is the unemployment rate going up? Because they do a survey of households and they ask you in the household, do you have a job? Are you looking for a job? And a bunch of other questions like that. Then they adjust the survey by population. 4 years ago, the population of the United States was growing 0.3%, and it had been in a 20-year downtrend. And now it's growing at 1.1%. It did a complete U-turn up, and it's at a 20-year high. That huge population burst is why they're adjusting all of these numbers, and they're saying there's more unemployed people all the time because there's more people in the country. And unfortunately, most of the people coming over the border don't have a job, and that's getting picked up in the survey, and that's why the unemployment rate is going up. Let me throw out another statistic from CPI today. One of the big head scratchers for Wall Street on CPI today was owner's equivalent rent was up 0.6%. Yeah. And that was the catalyst for core inflation being up 0.3% instead of 0.2, which gave us all the gyrations. Oh, but we all know that owner's equivalent rents are on their way down, and home prices are going to be on their way down, even though they're not. If you look at Zillow, or if you look at Redfin or any of those other numbers, I'm Case Shiller for home prices, Zillow for rents, those numbers are going up. But what's happening there is Wall Street has been forecasting that this rental component that is holding up inflation is overstated, and it's going to start to come down. Well, what if there's a reason for it to stay up? And what is the reason? We need 7 more million households. We need more units. We got people coming in that need a place to live every day. We have a housing and we have a rental shortage because the population of the country is exploding higher. And that's why you get this weird situation in the housing market. Oh, the housing market's terrible. Look, sales are down, starts aren't going anything, or mortgage prices are up, or affordability is terrible. No one can afford a house. Okay, why is the price at an all-time high? And why does it keep going up? Because there's a shortage, because people need a place to live because the population is growing much faster than we think. This permeates all of the statistics. So with that population growth and all of that $2 trillion of government spending that they were referring to, the $2 trillion number, the U.S. government spends $6 trillion a year. That's equal to about 22% of GDP. 4 of it comes from taxes. 2 of it they borrow. That's the deficit, the $2 trillion deficit. All that government spending on top of that demand from these bodies coming into the country, you're not going to get a recession. But what you are going to get is persistent inflation. And that's the one thing that Wall Street has decided, that's not a problem anymore. There is no more inflation, is where they are. And I think, like I said, this harkens me back 3 years ago to, they were this sure that inflation was going to be transitory 3 years ago as well.
Edward McKernan just tweeted out at me. He said owner's equivalent rent could be fixed with lower mortgage rates. This is so simple. I'm not sure it's that simple, but go ahead, Jim.
No, it would be worse. It would be worse. The problem is we don't need more demand for people to want to move. We need more housing starts. We need more people building houses is what we need.
Right.
And because we've got all these people coming into the country. Now they're poor, they're taking up the lower end. So the people that take up the lower end have to move up a notch, and everybody has to shift up a notch. And then you wind up with the shortage that you wind up with. So we don't need to say, look, all these millions of people coming over the border need a place to live. Now I need you to want to go find another house too with them. What I need is guys swinging hammers, building more houses and building more apartment buildings. That's what we need. And we're not really getting that per se, because I think a lot of the home builders and a lot of the home builder markets are kind of offsides. And let me explain. Home starts, housing starts. Where does, I looked this number up last week, 83% of housing starts in this country occur in the South and the West. The Midwest and the Northeast is 17% of housing starts. Why? The Midwest and Northeast are all built out. There's nowhere else other than in the exurbs to be building out. But if you're talking about the Phoenix real estate market trades more than the New York City real estate market. The New York City real estate market is a fixed market. There's no empty land there. There's just some rehabs going on, and it's just turning over existing units. What are we doing with all these migrants? We're putting them on buses and we're sending them to New York City. We're sending them to Chicago. We're sending them to Boston. These housing markets aren't structured to handle an increase in their population. Their populations have been declining as everybody leaves and goes to the South and West. That's creating a shortage. So if the answer is you can't get a house in Naperville, Illinois, or you can't get a house in Oak Park, Illinois, to use some suburbs of Chicago, because you're competing with somebody who's got squeezed out of a lower end house because of all these migrants that are coming in. I know we're going to make the mortgage rates lower so that we can encourage more people like you to start bidding for those houses. No, we need more construction.
Or
we need more building out.
What if we just give everyone $25,000?
Actually,
why stop there? Why just not give everybody a house?
Steve Goldstraw just said that. He said that Kamala is going to solve the housing shortage by giving everyone a free mortgage. He just said that in the comments.
By the way, Economics 101. If you give everybody a $25,000 grant on a down payment, what happens to what happens to home prices? They all go up $25,000.
No, I disagree. I think they go up more than $25,000 because we all.
All right, at least 25. At least 25. At least.
Once you set an asset in motion, then buying begets buying. Right? Yes.
Right.
I'm going to throw one more out there, just out of respect to our viewers. Glitchbuster, he started to get mad because he asked if we work or do we just talk, but he's talking about Aussie dollar moving to the upside as if we trade every single thing that moves every single second. I will tell you this.
Yeah.
There's a decent, this is just technical. If Jim wants to throw anything fundamental, go ahead. I only look at like the daily chart and even further out most of the time. So the fact that we had almost an outside range today after 3 consecutive days lower makes me mildly bullish the Aussie dollar, but we bounced off a flat 200-day moving average into a flat 50-day moving average, haven't quite closed it above. And the overall trend, basically starting from about August 28th, is lower. So if you're looking at the Aussie dollar as a risk-on indicator, it could turn in 28 basis points. So I'm not really interested in that particular subject. I don't know if you guys have any other view, fundamentally or otherwise.
Yeah. I'm short the euro. I'm not touching the Aussie.
There you go.
Yeah.
So there you go, Glitch. We work too.
We do. Glitch, we work all damn day.
We work all day. That's why our podcast is at freaking 4:00 Eastern time. It's the only time we have time.
We ever work.
I want to put up a comment by James and then throw it back to you, Jimmy. James McTeague.
Yeah. Oh, I know him.
He says, you know him. That's somebody you know, right?
No, I mean, I know him from Twitter. We talk. Yeah.
All right. So my lawyer in Lancaster says the Amish bought a property and turned them into Airbnbs, reducing the housing stock. Lewis Litt back there is slow. There goes Lewis Litt putting the comment up. Says the Amish bought up properties and turned them into Airbnbs, reducing the housing stock, which brings me to a question that's nobody's asked here, but I want to ask. What is both your guys' view on private equity buying up housing and renting them out? I'm completely a free market capitalist, but something about that sticks in my craw.
Jim, you go first because I have some stuff on this, but I want to hear you first.
I'm kind of, Bobby, I'm with you. I don't per se have a problem with that. I also ultimately think that one of the things that's interesting about our rental market is it's very hard to rent a single family home. If you want to rent a 3-bedroom apartment, you can rent a 3-bedroom apartment. But what if you want to rent a 3-bedroom house with a garage? That's very difficult to do.
Yeah.
That's where private equity comes in. Now, where private equity has been getting a bad name is that they outsource the management to these management companies. It can be kind of brutal, right? If you miss your payment, your stuff's on the curb and you're out on the street, and they're very, very difficult to deal with as well. But in general, I don't really have a problem with it, because what would be the alternative if they didn't buy these places? A lot of them would probably be neglected, and they would probably not be fixed up.
So tell me this, though. Are they, and I don't know the answer to this, I've heard people say both things. Are they getting incentives, perks, lower rates than the average guy can get in order to unlevel the playing field in their favor in these markets?
Probably, and to the extent that they're borrowing at bulk in mass by doing corporate bond deals on Wall Street, and then probably at investment grade credit ratings, and then taking that cheaper financing to buy up these homes, that their monthly payment for these homes would be cheaper than you or me buying that same home on a conventional mortgage.
Right. That's the only objection I have to that whole system, is that it seems that it's aligned for them. But I want to go back to the immigrant thing too, because one thing I've been railing again, I wrote about it again today. I'm going to vote for Donald Trump. That does not mean I agree with everything. I actually don't agree with a lot of what he says. I think any one of the three of us on this show would be infinitely better policy president than either of those two clowns. Sorry about that. So anyway, he's talking about deporting 20 million people, 20 million illegal immigrants, deporting them. I think that is asinine on many different levels. One, I think it's not feasible. Two, the ones we'd be deporting were the ones, are probably the honest ones who are coming to give themselves up. But three, from an economic standpoint, as months go on, they become economically important, right? If they are working, if they are doing some of the jobs that we don't. Where do you stand on that?
Obama deported 3 million during his term. So,
oh wow, yeah, I do remember that. That is interesting.
Yeah. So it can be done in the millions. We've already done it. Let me be blunt. I live in the city of Chicago, and I can tell you that if you go on the south or west sides of the city, in like a lot of the minority neighborhoods, there's a lot of immigrants that live in those neighborhoods. And those in the existing people that live in those neighborhoods are hopping mad about having those people overrun their neighborhoods and causing problems, because they're unemployed, they've got very little opportunity, and so it's culturally they're not the same, and it's really a terrible mix. I might also throw, as an aside, I actually know somebody who lives in Springfield, Ohio. And I was talking to them yesterday before the debate, and they were actually, it was almost prescient. They were actually telling me that, no, this is a real problem with all these Haitians in the strain and the cultural adaptability and stuff. But it's become a sideshow about who's eating dogs, is basically what it's. And so you're missing the larger point with what's happening in Springfield, and so now we're talking about eating pets and stuff. But that is a problem. So look, you want to come to this country and you want to get a job and you want to, assimilate into the country. No one has a problem with that. But can we assimilate 20 million people? Do we have 20 million open low-end jobs, largely unskilled jobs for these workers? No, we don't. We don't have that many of them. So what's going to happen to them as they stay in this country and they don't have opportunity? It's going to be a difficult thing. So I would like to tell you that there's a way to get there to help get them employed. I know a way we could get them employed. let's cut the funds rate to 1% and let's crank up the economy like crazy and just deal with a 10% inflation rate. Because
I think he's being facetious, people. But anyway,
yes, I am. And
it sounded serious. Right?
Yeah, exactly. And then do your valuations in the stock market when corporate rates are 12% and see where your PE should be at that point. But no, therein lies the problem. They're here for a job, but we don't have 20 million jobs for them.
So how do you solve it?
It's a very difficult thing to solve. I mean, the problem is we let them in the first place. That is the problem.
Yes.
We let them in. We created another Arizona is what we've done. Now, do we have another Arizona worth of unfilled jobs for them? The JOLTS report says that we have like 7 million unfilled jobs in the United States in total. And most of those jobs are skilled labor jobs. You just don't show up and don't speak English with no skill for the vast majority of those jobs. Right. So, yeah, I mean, you could probably see some of the males working in construction and some people working in, healthcare and some people working in, hospitality. But I don't see us saying, boy, I wish we had 4 million more people in hospitality jobs. Yep. There's just not that many of them. So it is a difficult problem. I'll tell you this much. If we don't find a solution for them and we just leave them here with no opportunity, it isn't going to get better.
No, and you hit it right in the head at the end. It's got to be opportunity. I don't believe it's feasible to round them all up and send them back. I do think it's feasible to immediately lock down the border, manage and vet immigration the way it is supposed to be, not just having an open border. But I think this is a problem that takes 5 to 10 years.
I think you said the thing that we can all agree on. Look, we've got so many of them. And look, we did this. That's why we closed Ellis Island, I think, in 1924. We got so many migrants into the country. We need to assimilate them. We need to absorb them. So they shut it down. Right. And I think that we need to shut down the border and go to zero migration until we assimilate what we have. Then we could talk about whether or not we want to increase it.
And again. I will add that our people here, and I hate to bring this back to the Italians too, it wasn't just prohibition that forced us, our ancestors, into lives of crime. It was an economy with no opportunity. There was plenty of crime before prohibition. I mean, there was plenty of organized Italian crime before prohibition started. That just kickstarted it to another world thing. So the point Jim's trying to make, which is a valid point, if you allow a shit ton of immigration in with no real opportunity, you get bad outcomes. So it's not just about who the Haitians are sending. It's about the environment they're coming into too. And we need to create jobs. But anyway, that's my little diatribe. When I run for Senate, I can count on your support, right? No, I can't be. Senators have to be tall. I could be congressman. There's a book on this. About senators are usually tall. Congressmen are usually shorter. So I guess I have to be congressman. Bobby?
Jim, I think Tom Morgan. He just sent me a private message saying, give Bianco my love.
Yes, I do. Thank you.
He said he sends his love. And now Edward has a good point up here, and I actually want to answer it myself and then throw it to you guys. Same one who talked about we need lower rates for the housing, right? Same guy. My son works in home building in Dallas. Builders have lower costs in 2021. Build time is 4 months versus 8 to 9 months. Construction workers now oversupplied. They can scale up 2x if needed. They just need to lower rates for buyers to put down a contract. New home builders are already buying rates down to about 3.99%. I saw it here in Florida, where you actually have new developments and they say, we can provide you with 3.99%, which is higher than people who bought homes in Florida in 2021. I know that from personal experience. I'm sorry, lower, a lot lower, about 1% lower than people who bought in 2021. And if you have lower costs in 2021, you could build faster and you can scale up 2x. You actually, in my opinion, don't need lower mortgage rates at this particular time. You can scale up, buy down mortgages with those lowered costs and those, I'm assuming, lower wages with the construction worker oversupply. And you could do that, but they're not doing it for a reason. And I don't have home builder expertise to understand why, but they're not, Jimmy.
Let me add a little layer of that before we throw it to Bianco too. First of all, Ed, your original question about the mortgages, I viewed from just the demand side, thought it was a dumb question. I was totally wrong, and I apologize. Once you added context to it, it's not a dumb question at all when you talk about home starts and contracts between builders. Sorry about that. So I want to know, for Bianco's answer too, is that I believe there is just regulatory layers that have been posed, particularly in certain urban areas around the country too, that are adding a shit ton to the cost of homes and providing a disincentive to build more homes too. With everything that Bobby said, including what I said, what are your thoughts on that?
So I'm going to go back to the original part of the question. In Dallas, Dallas is an expanding market. Dallas is a home building market. Bobby, you're in Florida. It is an expanding home building market. But if you want to talk about the Northeast and if you want to talk about the Midwest, and like I said, about 17% of the of home starts are in the Northeast and Midwest. I think something like 40% of the population lives in the Northeast and Midwest. So it's underrepresented by home prices. Now, try and build those homes that you're getting, that you're building in Dallas on that 4-month turnaround. Try and build it, in Palatine. How's that going to go, Jimmy? If you want to try and,
I've been there.
Right. It's going to be very difficult to get those. And the other thing I'll throw out too is that's the new teaser rate too. This is something that I've always thought would be kind of interesting if we ever saw inflation. A lot of mortgage product right now is buy a mortgage with a low 1-year teaser rate. Now it will adjust up.
What can go wrong?
Right. It'll adjust up a lot in year 2. But don't worry. Jay Powell's going to cut rates 9 times. And in a year, you'll be able to refinance at that rate or a lower rate and keep that level permanent. So there's this gigantic roll of the dice that everybody's got all of these teaser mortgages waiting for Jay to cut rates so we could then kick off a gigantic refi boom at those lower rates in order to trade out of that teaser before it gets reset into something a little bit more permanent.
Sounds like
that's fine if it works. It's fine if it works that way. But
sounds like a market positioning trade, and we all know how those can turn around on you and have everyone.
Right, exactly.
Can we flip real quick? We are not a political show. We have zero interest in politics. We have lots of interest in policy. We just talked about Trump's immigration policy deportation, which I disagree with. Some agree. We can talk about Trump's tariffs all we want, but I believe that's a tool to try to get our trading partners to come to the table, negotiate. I disagree with it in principle. But then on to Kamala's 5 stated policies over the last 3 weeks: taxing unrealized capital gains, jacking up the corporate tax rate, jacking up capital gains, fixing prices, rent control was today's thing she talked about. Do you think there is as vast an economic difference between the two candidates to make it matter to the average person, the average trader, average analyst, take the question wherever you want, that one side it's dire or it's not dire, who wins the election? Do you give a shit?
Yeah, well, I mean, there's two answers to that question, right? There's the economic answer.
Right.
How
Which
much
is what I want to focus on mostly. Right.
Right. And then there's kind of more cultural kind of questions and stuff like that. I do think on the cultural side, there is big differences between Trump and Harris. But on the economic questions, yeah, I do think that there's definitely big differences. But let me start off by answering the economic question with something that I always say. She wants to tax unrealized capital gains. He wants to become Federal Reserve Chairman. As president, he also wants to be Federal Reserve Chairman.
Oh, that's interesting.
We were talking about 5th grade boys before. Let's go to 8th grade. Yeah. In 8th grade, you took your government class. And in I remember my government class, and what I remembered about it was the president can't do anything unless 218 congressmen and 51 senators agree with him and pass a bill. Trump could bloviate all he wants about being the Federal Reserve Chairman. You need to rewrite the Federal Reserve Act. You need 218 congressmen and 51 senators to sign their name to that bill, and then he could be the Federal Reserve Chairman. You want to tax unrealized capital gains? It's exactly the same thing. She needs 208. She could say whatever she wants about this stuff. So I think at the end of the day, their policy outlook is very, very different, but their policy realities are not going to be nearly as different unless we have a red or a blue wave with one or either one of them right now. And if you look at the betting markets and the polls and everything else, it looks like we're still going to wind up with divided government, whichever one winds up winning.
If it was a three-way race and it was Kamala Harris, Donald Trump, and a soap dish, who would get your vote?
Is it a used soap dish or a new one? No, I agree with you that this is part of the problem with American politics, is that we have blown up the presidency to a level that no human being is able to fully satisfy the country. If you look at some of the candidates we've had in the past, Mitt Romney, John McCain, Barack Obama, all the way on down, they've had some pretty impressive resumes. But then when they run for president, oh, they're just so unworthy and they're just so awful as candidates. That's because everybody is. Yeah. Because we want something that doesn't exist out of the presidency.
There's a Thomas Sowell quote about if you have unreal expectations for what government should do, you will vote for liars. Do you guys know the quote I'm talking about? Whatever. It was
I probably have it on my shelf here, but I can't grab it right
now. In one of your Thomas Sowell books. Sowell or Sowell? I never know how to pronounce his name. Sowell.
Yeah. Sowell. Yeah.
Sowell. Yeah. So I wanted to get after, again, to talk about policy here. Well, actually, here's what Widge says. In that line of thought about policy, the NFIB survey will be self-fulfilling, up or down.
You saw what happened yesterday, right? But anyway, go on. Yeah.
Well, what do you mean by what happened yesterday?
So the business optimism number comes out once a month, like whatever the Tuesday is. And July, the number that reflected July had this huge shot higher. And then when you look upon analysis, in the time that it was the survey time was when Joe Biden was stepping down, when Donald Trump's went to 65% of winning by the middle of the month. My thesis was that once August came around and then we saw that number in September, that number would have come back to earth. I was right. I wasn't as right as much as I thought I would be, because that small business optimism could tick down, but not as much. But I think what he's saying is the right present creates an air of optimism. I believe that there's some truth in that. Do you?
Yeah. Yeah. All the surveys, the problem right now with economic surveys, confidence surveys, University of Michigan, Conference Board, NFIB, is effectively they're all political surveys. The biggest thing that changes people's opinion about the economy is, are you on team red or team blue? And is your guy in the White House? And you could see that clearly. In fact, I tweeted out the optimism survey yesterday, color-coded by presidency, to point out that the NFIB surveys small businesses. Small business owners are more Republican than the general population. So you were dead right that when they thought Trump was going to win in July because he was running against Biden, small business optimism went up. Then Biden is replaced, and now what looked like a runaway victory is now a tight race. It went back down. And depending on what the polls say is the outcome of last night's debate, that number will probably respond to it. You see that with the University of Michigan conference survey. You see that with Conference Board. So I've often argued that the problem with these consumer confidence surveys is they're political surveys, especially in an election year and especially within 90 days of the election, that they're really political surveys dressed up as economic surveys. Because if you look at, they break down these surveys, they call it the crosstabs, men versus women, rich versus poor, rent versus own, demographically, not much difference. Republican versus Democrat, gigantic difference. So it really is driven by your politics with these surveys. So I'm always cautious when it comes to the surveys, because am I reading a political statement or am I reading an economic statement? In the NFIB number pulling back in August, I think it is a political statement more than it is an economic statement.
I do too. And I think it's fascinating. Bobby, I do want to give you the question, but I think it's fascinating that you said the small business owners tend to be Republican. And I think that as a small business owner myself, I find that is absolutely true. And, the people who I talk to own the other small business, and I wonder what that is. And I think it's because individualists versus collectivists, right? So that's got to be the bottom line, right? The individualist wants to make it his own way, wants the government out of the way. The collective,
especially as a small business owner. I mean, what is every small business owner when you start one, you're at a high risk of failure.
Sure.
You know, and it takes a certain type of mindset to want to do something like that. You know, when those that succeed tend to want to have government off their back. They tend to want, because they made it on their own. They did it without the support. That's why I find this whole idea that she's going to give us some money to start a business is so antithetical to the mentality of people that start businesses. It'll be, you know, it'll be PPP 2.0 is what that's going to wind up being. If we're going to wind up giving people that start new businesses $50,000 or something like that to start their new business, it'll just be another PPP disaster. Yeah.
I want to do a little public service announcement here that's spurred by Monway's comment. He said Trump is a pathological liar. And by the way, most successful New Yorkers are pathological liars. Sorry for anyone who lives there. I'm referring to New York City. I don't disagree. Again, we talk about policy here, but I don't disagree that Trump is a liar. I think Biden is a liar. I think Kamala is a liar. I think Clinton was a liar. I think Bush 2 was a liar. There's something about politics and successful New Yorkers that just point to, let's call it exaggeration. So I just want to.
So you hit the Bobby, you hit the key word. Let me restraight the question.
Yeah.
Is Trump a liar, or is he just a master of bells? He's an exaggerator. Yeah, is there a difference? Is there a difference between being an exaggerator and a liar?
I think so. I think so. That's what I always, like when they say he's a liar, I'm like, yeah, I mean, sure. But I mean, it's not yes, I think there's an enormous.
You know, because I've seen this a lot where he goes, this is the best, greatest that's ever been. You know, I don't have a Trump.
And then like, he's lying. Okay. Sure.
Yeah. Well, no, so he's just an exaggerator. That's all.
Here's another thing. Claude Ukulele says PPP benefited all those Republican small business owners and the Democrat small business owners.
Oh, by the way, can I handle this one too? Because I got PPP at the restaurant too. Yeah. Claude, and anybody who questions a small business who took a PPP, please go fuck yourself. And I'll tell you why. They literally closed down our business. The PPP was a complementary policy with closing down our business. To view it as an individual thing is absolutely asinine. Claude, I apologize for saying to go fuck yourself.
Yeah, he doesn't mean you, Claude. He just means as a general.
I don't mean you, Claude. I mean anyone who's
right.
on taking $170,000 to pay my employees, which I'd already decided to pay them anyway for a time. But that time wasn't going to be 6 months where we were going to pay employees out of our own pocket too. So literally go straight to hell. They offered me $1 million for my restaurant. Guess what I would have taken? $1 million. Am I against the policy? Yes, I'm against the policy, and I'm against shutting down the businesses. So there's my little diatribe rant. Thank you.
So let me, Jimmy, let me follow on that. So PPP came with a stipulation, and that stipulation was we closed your business, so we're going to give you some money. $50,000 to start a new business. Do you think they're going to just hand you that money in small bills and say, knock yourself out? The government's going to be your business partner is basically what's going to happen when you take that money. And I think at the end of the day, you're going to rue the day you took it.
No,
with the government as your business partner.
There was a lot of hoops we had to jump through in the subsequent 2 years after taking it. We're still
Did we have our podcast when the PPP came out? Because Claude just said they gave him 60 grand and we didn't get ours.
Well, we didn't get any 60 grand. I would have taken that 60 grand in a heartbeat.
The second best thing.
You mean for the podcast? The podcast didn't get PPP?
Yeah, we got 60 grand. There's a lot of Democratic podcasters out there, but I'm just saying. The second most important thing I think, other than letting Jim Bianco talk here, which has been fantastic so far, is you guys should buy this damn book. Okay, Social Justice Fallacies by Thomas Sowell. I know this is stupid, but I want to read a segment here. I got a bunch of pages dog-eared here, and I think this is kind of an important thing here. I lost it. No, I didn't. Hang on, it's right here. Stagnating income growth. So Thomas Sowell goes over data, right? And he parses data better than anyone in terms of economic data and how it applies to politics. There's also a long history of alarmist claims about supposedly stagnating income growth among Americans as a whole. For example, the average real income, that is money income adjusted for inflation, of American households rose by only 6%. American households over the period of more than a quarter century from 1969 to 1996. But the average real income per person in the United States rose by 51% over that same period. You could read all kinds of passages like that in here where Thomas Sowell goes over the data and shows you that one side says the data one way and another side says the data the other way. And this is why they're all pathological liars. We need to talk about markets. I'm sorry about that.
we were done. We're up against the time.
Yeah, we're basically up against the clock.
Up against the clock. It went like for 5 minutes time. No one else has anything else to add, right? Can we call it?
Jim Bianco, it's your show, even though I just took an hour of it.
Babylon B just posted, woman who makes a career of singing about bad choices with men endorses Kamala Harris.
Also, you guys got to look on X if you want something funny. There's actually video of somebody tricking President Biden into putting on a Trump hat.
Oh, that's real. I
It's
saw that.
Yeah, it's elder abuse.
Did it just happen like today or
Yesterday?
I saw it like 4 minutes ago. It may have happened earlier, but it's literally trending right now, and I think it's elder abuse. But some of you might find it funny.
So they managed to get him to wear a MAGA hat is basically what happened?
He puts on a Trump 2024
Trump
hat.
2024
hat he's wearing. It's on Twitter.
Yeah.
Okay.
Anyway, that's enough. I'm going to get a workout in, maybe get a nap. Thank you, Jim, for being here. Follow Jim at Bianco Research. What's your Twitter handle again?
Bianco Research.
Bianco Research. He's one of the best Twitter follows. He's when I disagree with Jim, it makes me all nervous because 70% of the times I've disagreed with him, I've been wrong, he's been right, and I don't like that so much. He's one of the few guys who I may change my thesis on depending on. But I would like to thank you guys for tuning in. All the DMs, all the retweets. We appreciate that so much. Remember what Bobby and I and guys like Jim are trying to do. Bobby and I particularly, I don't want to speak for Jim in this part of it. We were in legacy media for 25 years. Every time we were on air, we were pressured for certain viewpoints from producers or from sponsors. We don't like that. We might be wrong in our opinion, but we want to give 100% our opinion. You guys and these platforms are allowing us to do that, and we are humbled by your support. This is the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. That's Jim Bianco. And we do have some friends who aren't Italians.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.